To chew on after a week of chewing on all sorts of trade headlines. And the story is this. The U.S. economy and the Canadian economy saw jobs creation that was less than what analysts were expecting. Is it a suggestion that there is economic uncertainty as a trade war emerges? Let's get some perspective from Youngyu Ma, Chief Investment Officer at BMO Wealth Management. What do you think?
Yeah, thanks, John. It's great to be here. Well, the jobs report, even though the numbers weren't quite as high as the headlines or at least the analysts were expecting, they were at least stable and they were relatively broad-based. So I think it provides an element of, or at least a sigh of relief that was taking place as a lot of people were braced for perhaps very negative numbers coming in. Now, on the downside, there's not a lot in that jobs report, which is forward-looking. But if you do look at some of the specific line items in the jobs report, temporary employment was down significantly. The number of underemployed people skyrocketed as well. So there is some softness along the margins. The labor market is probably going to soften in the months going forward here, but at least it's not falling off a cliff, and that is providing a little bit of respite today in the markets.
What do you think ultimately the economic story looks like? Because I would say that the majority of people I've been speaking to over the last few days, not only would they not be surprised to see the Bank of Canada cut interest rates next week, they are increasingly expecting that the Bank of Canada is going to have to bring rates down fairly aggressively over the course of the year in light of the uncertainty.
Well, uncertainty is definitely the order of the day, and that cloud is going to be over the markets and the economies of both Canada and the U.S. for some time to come. Yes, the respite on the tariffs is welcome, but it's only creating another several weeks of uncertainty until we get to April to see what actually happens. And if something can be more resolved between now and then, that's more lasting and more stable. So yes, we do think probably both the Bank of Canada and later in this year, the Fed will be on track to cut interest rates. That's going to provide some help and some support to the economy and the markets. But a lot of times there's a lag before the impact of that actually kicks in. So we could be in store for a bumpy path here for some weaker economic data, especially if this uncertainty that we have isn't lifted quickly. Businesses are just going to be in a collective cautionary mode that is going to last and have an impact on the economies.
So are you expecting then that the stimulus story will become a bigger story? I mean, we're already hearing this around the world that governments are either at the ready or already making announcements around some kind of fiscal firepower.
Well, that's going to be helpful where it comes to pass, but at least in the U.S., a lot of what's happening is actually spending cuts. And there's a mismatch between the spending cuts and the layoffs in the government sector that are taking place right now versus when stimulus might happen in the form of tax cuts or Fed rate cuts later in the year. So we have this timing mismatch, which isn't helpful to the economy or the markets. And the question is, how much downward momentum could actually build in the coming weeks or months if we still have this uncertainty over the markets? We don't think it's going to be acute, but we do see the prospect of some downward momentum taking hold here in the economy. So yes, stimulus is helpful, but that's going to take a little while. We have this timing issue in front of us right now.
Okay, so then how are you putting all these pieces together to form an investment strategy right now?
Well, the first step in this investment strategy is probably to be patient. This is going to take a while to play out. As you can see, the information or the pronouncements change on a day-by-day, if not hour-by-hour basis at times. We do think we'll find stability in terms of what the playing field looks like in the coming months. But whether or not we find that in the coming weeks is a big question mark. So what might look like good opportunities now, it probably pays to wait for even better opportunities, which could come along later in the coming months. But we do think the underlying fundamentals are stable and healthy. So we don't see major imbalances that would lead to a downward spiral effect in the economy. So once this uncertainty can get resolved, once everyone, including consumers and businesses, understand what the playing field looks like and can make adjustments, we do think that that stimulus from the central banks and from fiscal policy will start to kick in. But in the meantime, I think it calls for patience and not being overly jittery in this market.
Youngyu Ma, appreciate your time. Thanks very much. We'll keep all of that in mind. And we talked